In this video, we're going to talk about what is delta. Now, delta is part of the 5 Greek terms used to make up the anatomy of an options price. Now, delta is the most important of these Greeks, and it's the one that I look to immediately, the first one I look at before I start deciding where I'm going to purchase an option or if I'm going to buy or sell, because it does multiple things. So if we look at, for example, here, we're going to look at AAPL. That's going to be ticker symbol AAPL. That's Apple. And we have our volume here, our delta, our sell and our buy. We have our bid and our ask, our delta and our volume on here for our options chain on both sides here. First thing you're going to notice, if you look at the delta, it's positive here on the calls and it's negative on the puts. That's because if the stock price, the underlying asset changes in price, then we're going to be adding money to our calls here and we're going to be taking away from our puts. And delta is always positive for our calls and it's always negative for our puts. Now, what does the delta actually do just in general? Well, really, it represents the amount that the options price will change from a $1 move in the underlying asset. That's with all things being equal. So we're not looking at volatility, theta, anything like that right now. We're just all things being equal. It's going to represent a $1 move. So what does that mean? Well, it means if I purchase this 235 strike right here in the February monthlies, I'm paying right around $6 for it. If I purchase this option and all things being equal, Apple moves up from the 236 straight now, it moves up $1 to 237. Well, then I just gained 48 cents on my options price, which means I just made 48 cents. So now the price of my option, all things being equal, is going to be $6.48. Now, what's another thing that delta does besides that, besides being that sensitive to a dollar move in a underlying asset? Well, it's going to also give us our percentages here of expiring in the money and touching in the money before this expiration. So this 235 strike is going to have a 48 cent delta, or I'm sorry, a 48 delta. And what that means is I have a 48% chance of ending in the money by this February 21st expiration. Also, if we double the delta, so if we take, let's for example, this 245 down here, this 21 delta, I have a 21% chance of this ending in the money. But if I double it to 42, then that gives me the probabilities of touching in the money before February 21st. So there's a chance that we could get a move up here, a $10 move in the underlying price before February 21st, and it's going to at least touch once in the money, or at least be in the money before this expiration. So delta does a lot of things. So it measures the sensitivity in the options price compared to a dollar move in the stock. So 48, stock price goes up, I just made 48 cents. Stock price goes down, I lose 48 cents. Simple enough. It also gives us our probabilities. The delta is 48. I got a 48% chance of ending in the money here. And also, if I double it down here, this 21 delta just turned into 42% chance of me touching it before that expiration. So all in all, delta is very, very important. And it's the main Greek that we look for while or before placing any sort of trade. All right, guys, make sure to check us on all of our social media. And we also have a Discord service if you are interested. You can find all of our socials in the description below.